Isaac, thank you so much for your time today. We saw losses coming through for the most part of last week. Markets reversing today, a gain of 0.83% for the NSE 20.
Yes.
Yes, Isaac, tell us your views on the markets in today's session.
Today, I think, like you said, there's actually been a very strong rebound based on what was happening last week. And I think there's renewed confidence about where equities are likely to go. And this mainly being in line with more announcements coming into the market. We've seen Cooperative Bank posting very, very strong growth in earnings, half-year earnings up 50%. We've also seen insurer Jubilee Holdings earnings up by 69%, half-year dividend of $1. So I think this, in addition to what has been coming through last week, is giving people confidence that there's a lot more to look forward to in the months ahead.
Well, just taking a look at Cooperative Bank, as you mentioned, a gross profit jump of around 50%, and that really boosted by the 32% rise in interest income. Loan book much stronger as well, 23% gain to around 70 billion shillings. Total assets increasing by 44%, and forecast an even stronger second half. Of course, it is quite a tough environment out there for the banks, given the fact that credit demand is still relatively bleak. When do you see that turning around? Because obviously we've seen quite a nice turnaround for these banks in the first half of 2010.
I think for Cooperative Bank, it's basically the results or rather the culmination of a strategy that has proven to be very, very effective. According to them, they're saying they have about 17 branches that they opened recently that are yet to break even. And the expectation is as these branches break even, that full year earnings this year might actually double. And that, I think, is really, really cause for excitement amongst shareholders and as far as the direction of their share price is concerned.
Well, given the fact that most of the banks have started releasing results and we have seen a lot of positive numbers coming through, many analysts out there relatively bullish about the banking sector. Do you agree with this?
I actually agree with that. I think mainly in our opinion, what might be informing that is perhaps a less faster than expected reduction in interest rates, lending rates implies that net interest margins are likely to continue, either stay where they are or continue increasing, which basically means the increased profits, especially in line with the expansion strategy that we've seen for most of last year and this year. So, and then of course also the increase in credit. So all this is expected to translate into bigger loan books, and of course, with the healthier spreads, good profits as well.
Well, just looking at the rights issue scenario that is playing out in Kenya, because it is all about rights issues right now, and we've got Standard Chartered Bank, solid demand ahead of the closing of its rights issue book, which is set to close on the 18th of August. The bank had announced that it set the price of a rights issue at a heavily discounted 165 shillings 45. Your view on this, and whether you think that it's a good opportunity for investors out there?
I believe it is actually a very, very good opportunity. Having seen the price go up to about 300 shillings thereabouts before the announcement of the half-year earnings and the rights issue price, and the way the price has actually been coming down, as it goes down, it actually makes the stock even more attractive. And I think also picking the rights at a discounted price of 165 shillings, bearing in mind the business strategy that the bank is embarking on, having also recently acquired the custody business of Barclays Bank, all this, I think, combined is likely to result in much better improvement in earnings by year end, and also sustainability in terms of earnings growth moving forward. So definitely it's a very, very good buy.
Well, just looking at Barclays Bank, because they've also sort of reiterated the fact that it's going to be a relatively strong second half, and this company says it's not going to be issuing the final 2 billion shilling medium-term note. Really just proof that most of these banks are starting to become well capitalized on their own. Isaac, your view on that?
Yes, I think. Definitely, as things stand right now, most of the major banks, at least, are very, very well capitalized. We've seen Barclays Bank saying, they're not going to go the bond route. They think they have adequate capital. KCB, we saw last week announcement of the rights issue, and receiving very, very fair results from the market. So I think going forward, I think, and again on the back of very, very good, robust earnings growth, there'll be less pressure on the big banks to go to the market for additional capital. They might actually be able to finance themselves internally moving forward, especially in line with maintaining prudential ratios and all that. So it looks very, very healthy for them in the medium term.
All right, investments into Kenya for 2009 increased above 156 billion shillings, surpassing the target of 100 billion shillings. We know that Kenya does need to grow by around 10% if it's going to, receive the target of the Vision 2030. Your view on this, and obviously there's still a lot of room to move to the upside, Isaac, when it comes to the equity market. Where are you putting your money right now, given that things are looking relatively optimistic?
Well, I would say more or less, bearing in mind that one also has to have a selective approach, but on the basis of performance that is coming out based on the current results, and also looking at fundamentals and, the major industries, looking also at the global picture in terms of an expected, low interest rates environment, less pressure on inflation rates moving forward, and again also, continued improvement or recovery of the economy. Wherever you cast your net, you're likely to end up much happier than you were previously. But we are particularly bullish on banks for the main reason of either a continuation of the current net interest spreads. And again, we're also bullish on commercials, industrials, selectively as well. So across the board, generally, when you look at valuations, it makes a very good case for an all-out buy strategy.